Right. Now, for me, it's already my third bear market that I'm experiencing. And I think the last bear market, I was quite often at the Beursplein 5, the Dutch stock exchange, where most people left the crypto industry. Icoinic was busy building its first algorithmic fund. And with us today is Wilhem Roth, CEO of Icoinic. Wilhem, welcome. Now, Wilhem, you built the first algorithmic fund in Europe, I think. Are you still the only fund that is working with AI?
No. So actually, the ecosystem has been growing quite a lot since the early stages of asset management, both here in the Netherlands and in Europe as a whole. But it's still a relatively small amount of parties that are doing kind of a high frequency trading perspective. Rather than the kind of buy and hold strategies that we're more akin with.
And how, Balder, I was going to introduce you.
How are you? Yeah, good.
Welcome. So how did these algos respond to the FTX drama? A lot of going up and down, or?
Well, usually the more volatility, the better we do.
Okay.
But you cannot always hedge market volatility. Happening with FTX, I think, hurt everyone across the board, whether they're in a VC instrument or a trading company like Icoinic. The strength that we do have is the capabilities of our trading team that comes with background from Optiver and IMC, and that gives us quite an extra notch to be able to at least the market a bit.
Cool. Why did you remove your badge? I heard from the photographers that it looks so much more sharper without the badge.
Everyone knows my name already. I think that's okay.
Now, as Blockchain Netherlands Foundation, we did a lot of research. I can also do it. I can also do it.
Definitely more updated.
Yeah, I thought they were clicking. No worries. But so as mentioned, as Blockchain Netherlands Foundation, we did a lot of research also here in the Dutch ecosystem. And as mentioned, we saw a tremendous growth of startups being found in the Netherlands. And this growth has been partially fueled by the investors like Maven 11. Maven 11 is the leading Dutch investor in digital assets. And with us today, just joined on the stage, is Balder Bovens.
Good to see you again, Jan.
Yeah.
And well organized. Compliments.
Well, many thanks for joining us. Last time I saw you still had this Campen and Go haircut.
We're going crypto. Perfect. Tattoos.
So, now Balder, you grew also massively together with the ecosystem. You raised a little bit more than $100 million. Did you already burn all this money investing in?
It wasn't FTX. No, I'm kidding.
Are you exposed to FTX?
Well, it's a long story. So next to the venture arm, for which we indeed raised the second venture fund end of last year, $120 million. We also started building a credit arm around 18 months ago. We've issued almost $1 billion in loans, and we've also issued to Alameda in the past. Yeah. So obviously, tricky situation, I think, for a lot of players in the industry. Good thing on that front is that we stopped, as one of the first, we stopped giving them out loans last summer, due to what we saw on the balance sheet. Obviously, we had insights on the numbers. So that's good, but obviously it's been turbulent times. I mean, in markets overall, credit, leverage, everything is getting back to normal, or very back to normal. So very turbulent times.
Back to normal, but are investors and for example, investors in both of your funds running away, or is the trust still there?
Well, we locked them up for 8 years, so that's going to be hard again. That's good about the structure. No, we actually had it's quite interesting. Every 6 months we do an update, which we call an investor circle. So we give an update to our LPs, and last time there was the Celsius moment, which fell down. And then this time, when first day 10 days ago, we again had an investor update just 2 days after FTX closed down. So we could comfort them with the fact that we had no direct exposure, no money at FTX. So I think that's good. So risk management worked on our end. But I think overall the confidence has been hit hard, right? I mean, I think we're getting to a stage that a lot of people are starting to acknowledge crypto as a whole. A lot of institutional investors, a lot more so, I would say, in the US than here in Europe. And that confidence has gotten a big knock just now, right? And I think what we need to be careful with is that there's a strong misconception. Everybody's looking at the headlines in Reuters and Bloomberg and saying, okay, again, crypto, right? So I think this has nothing to do with crypto. This is something to do with individuals who are misusing this system. And I think we definitely need to make a statement there that it's very different from what crypto is. And I think what Bert also already said is that if you look at crypto today, right, all these permissionless protocols out there, in DeFi world, they're still working. They had TVL, you can still take loans out, there's AMM. So I think a lot of these structures are doing actually very well. And time again, we show that they work very well.
Yeah. Now, as you already mentioned, like I think also CZ, founder of Binance, indicated that as industry, we just had a setback of like 2 years, right? All the trust that was vaporized, and how can we bring back trust again? I mean, there have been so many cases from Terra Luna, Celsius, now FTX. Maybe, yeah, what is next? Your next investor circle that you can mention. We hope, of course, that this was the last biggest piece of the puzzle, but how are we going to bring back trust? I mean, you, Wilhem, I guess your phone was ringing all day long, all these investors that were thinking like, what's happening with my money? What are you telling them?
Well, with weekly liquidity, our investors have a chance to move a bit faster. And yeah, definitely we hear the concern about what is happening in the market, but not what is happening with any company or institution out there beyond FTX. So the questions that we are mainly confronted by is how firms like Maven, Icoinic, and others in the ecosystem are cooperating or handling this. On the other side, you do see quite a difference when you talk to institutional parties. For them, this is the best moment ever. We got quite a ball up to go and request more regulations, more clarity, so we can actually participate in this ecosystem in an effective manner without having the same fears as we're experiencing now, as we experienced in 2018. Yeah. And part of the way to approach it is to bridge this kind of gap between those two worlds, and regulations. This is we expect will start taking a much faster track during next year.
Yeah. Is that also?
Yeah, I think it's kind of interesting that if you look at crypto started, right. So obviously we had this whole 2008 crisis. I mean, obviously Bitcoin was sort of born in that year, and that's sort of the antithesis to what banks were. And if you look at the systems we've built this year, or actually which have fallen down, it's interesting that exactly the same thing happened, right? So we again had centralized institutions across the globe with a lot of contagion risk. It started off with Terra Luna, Celsius fell, FreeSC fell, and then it became very apparent that they all had big books with each other, and which were non-transparent, right? And this technology is built to give us trust through decentralization. And the second thing, to give us transparency. So I think this will hopefully be looked back upon as the moment that we're going to be building more and better robust systems. This is also the reason why our credit business is built on an open infrastructure, Ethereum called Maple Finance. So we do the underwriting there as a credit underwriting service. But everybody that goes to that platform, you can see clearly what kind of exposure is in the books, right? You know exactly at what rate we have lended to whom. I think that type of transparency we need to start to ingrain in building new capital markets, and crypto is perfect for it, right? We only need to build it better, and I think that will be a lot of effort and money and talent going to that domain.
So this is your proof of funds kind of thing.
Well, the infrastructure just needs to be better, right? But yeah, proof of funds is just part of the discussion there.
Yeah,
yeah.
I think I still know you from the previous bear market, the previous bear cycle. If there's one big thing that really changed within the crypto market, what is it?
I think the identity of the investors. In the world where we had a lot of retail investors in the ecosystem has changed dramatically. You see from small, medium to large managers coming into the ecosystem, deploying capital of between 1% to 3% of their total wealth, from Julius Baer, Deutsche Börse, So we're looking at quite a mass change in the kind of profile of clients that are coming in. And with it, the kind of requirements and kind of infrastructure that both Icoinic and Maven has been able to build with our system.
And are these just like the more new type of investors, like the people that just sold their company and worked in tech, or are these also the really traditional financial institutions? Are these more like the family funds, family offices?
I mean, we can look at it from the news over the past 2 years. Julius Baer acquired Seba Bank, creating one of the first digital currency banks in Europe. If I look at parties like Barings and Mass Mutual, entering into more of the side of both derivatives and trading, I think the identity of the parties coming in is no longer the single or two people family office. It's the large corporations, and everyone within their own frame. So if you're talking to ING, I still remember Bob Holman saying that you'll never go into crypto. ING will never enter the ecosystem.
ING Bank.
It's the thing with the elephant. And guess what? Their entire innovation side is building custodial services for the ecosystem. So
even launched their own first DeFi products.
Exactly.
Yeah.
So I think that where people called us maybe the too early birds and even that we're one of those cowboys in the ecosystem, they're now part of the entire Wild West and building the infrastructure in it.
Yeah, I think to add to that, right, I think two things have really changed compared to the last bear market. If you said 2018, 2019, I think was the last real deep bear. Obviously, the size of the market today, right, due to the institutional influx we have seen over the last couple of years, starting with the adoption of Bitcoin in 2020. And then I think a lot of investors started to educate themselves and then said, okay, we're going to, specialize ourselves further in certain domains, right, either metaverse or DeFi, open finance, NFTs, right? So I think a lot of use cases have been explored by all these institutional investors. I think that's going to be a lot less going forward from this moment in time. So I think and the second thing is that I think looking at the ecosystem today compared to the last bear market 2018, 2019 was literally nothing, right? I mean, Ethereum was working, and everybody was sort of in a building mode, but that was the moment that Maker got adoption, Aave started building and further fleshing out its models, right? We got the AMM model from Uniswap, I think over the course of 2019,
AMM,
20.
just for people who
Oh yeah, automated market making, sort of a new pricing model, which allows you to swap assets from one wallet to the other wallet. I think most people know AMM. And today we have a lot of use cases, right? So DeFi is alive and kicking. Obviously, it's a lot smaller than it was 6 months ago. We see a lot of gaming teams coming to this industry as we start to improve the infrastructure, which allows for better scalability. We see a lot of use cases.
Or what kind of developments?
Well, I think play to earn is getting a little bit memed out, right? I think that was definitely very hot a couple of months ago, but I think just factually that a lot of gaming studios are starting to look now at the infrastructure and starting to see, okay, so there's value in a game and this digital asset and NFT can hold that value, and that means they can transfer it between parties. There's no centralized gaming studio controlling these assets and controlling that value. So I think that a lot of people are starting to spin up ideas there. NFTs are very much alive and kicking, marketplaces, OpenSeas. I mean, we can all laugh about the profile pictures, the Bored Apes and the CryptoPunks, but they were the foundation of a very strong vertical, I think, in due time, when there's a lot of assets which are non-fungible, which are going to be in value held by these NFTs. So we're way further than before, and I think the last year and also the coming 2 years will be again great for building on these building blocks and further building out the ecosystem.
And you already mentioned DeFi quite a lot. You are also mainly investing in DeFi projects, right?
No, we do a lot of infrastructure deals actually, which around Ethereum, rollups, modular is very important in our thesis, so building modular blockchains. We do a lot of, I like the term open finance a little bit more because people are a little less scared, because decentralized things like, oh, we can't take away all the power. Open finance is a better term to have access to these public permissionless protocols like Aave and others. And then sort of the last vertical we're focused on. broader Web3 team around making sure that we're going to be owners of our data stack again.
Yeah, but unless, I mean, there's indeed the size of DeFi is it declines, of course, with the crypto market going down as well. But on the other hand, and it's the same with the crypto market versus blockchain, there's a lot of cool developments there, right, in the DeFi ecosystem. I mean, you're investing in a lot of DeFi startups. You see all these incredible innovations taking place. What will cause the next big wave of adoption within DeFi?
I think DeFi is definitely going through a very tough year, right, this year. I mean, I think the regulation is coming. There's a lot of discussion, obviously, in the US around are they securities or not? What's the impact for if they are securities? So, and also the pricing of all these assets has been quite abominable, I would say. I mean, if you're a long DeFi since the start of the year, I think you're down 80-85%. That doesn't mean, obviously, that fundamentally it's a massive development, and we're very bullish on DeFi going forward, especially from this moment in time, with again a centralized party falling over. For me, I think a lot of building blocks are already there. I think we're going to see more innovation on the AMM model, which needs to be refined to make sure we have better pricing, better liquidity, deeper books, that they really start to compete with limit order books as we know them today on traditional exchanges. And I think the big step we need to start making here is, if you look why centralized exchanges are so dominant in terms of volume and users, is that they offer all these services, right? Perpetual, spot trading, I can go lending, earning, and I think we need to have better user experience for people in DeFi. That starts obviously with, okay, how do I interact with a wallet? How do I open it? How do I use a DeFi application? So all that type of stuff need to be further refined and made a whole lot easier for everyday users to get into this ecosystem. Yeah. And I think that's the big step we're going to be making.
Now, there's a lot of users entering the ecosystem, also investing in both your funds. But Wilhem, if they're joining Icoinic, I mean, do people really know about the technology, or is it just about investing cryptos and that? Do they really care?
Yeah, I mean, of course, depending on the profile. I think that if you're looking at a lot of private individuals, it could be from seeing the opportunity and thinking, okay, I can shoot to the moon, and hopefully that it's going to be soon. While on the other side, there is real excitement and interest in the technology itself, and we see it in a lot of our engagement with our LPs, that the main questions are not just about pricing, but are about technology, about how do we participate and support the ecosystem. And when looking on the other side, when talking to family offices, funds of funds, other hedge funds, then the questions become more regulatory. How can we, so for example, with our DeFi fund, do you trade on DEXs, yes or no? If no, why? How do you assess counterparty risk? When looking at the kind of questions that are coming, it's quite a mix, and it's becoming more and more knowledge based than kind of just the opportunity by itself.
Now, you mentioned like MiCAR, the EU regulation concerning cryptos is finally there. Is coming. I can see on the one hand that the traditional finance institutions, the pension funds, the traditional family offices are happy with the regulation. I mean, it's a kind of quality seal of approval. So finally, they are more confident in investing in funds like yours. On the other hand, do you also foresee problems with the new regulation when it comes to your fund, for example?
Well, to be fair, if I look at MiCAR, or I even look at CARF as another regulation that's coming next year, potentially.
What is it about, CARF?
That's more from a crypto regulatory reform that is aiming to directly deal with the tokens themselves. But as a hedge fund, MiCAR is not really something that we're seeing as affecting us directly, at least not on the funds themselves. Yeah. Will it have effect on most companies in the ecosystem? Yes. If you're in prop trading, if you're in more of the infrastructure side of the ecosystem, it is kind of a blessing in disguise. So it gives some instructions. It allows more institutions to come and interact with the crypto ecosystem. And at least from the companies like Icoinic, when looking at what we're requiring, our requirements are primarily from the IFM, are primarily from having a full AIFMD license rather than operating under the AIFMD light regime. And with that, to allow us to also engage and compete with other hedge funds that are operating in Germany or in Switzerland or in the UK that now have less of those restrictions. So I think that when we're looking at regulations, there's obviously a very delicate balance between the need to enforce and give some guidelines and completely strangling innovation. And I know that in the previous discussion there was around CBDCs and how does it go, and all of it goes hand in hand. It's the regulators can move sometimes very slowly, but the problem is that they also cast a very wide net. And the hope is that as much as we want regulations to come in, and we need it to come in, I think we also probably don't want to be in a situation that we need to spend more on lobbying in the coming decades.
Yeah, but I mean, especially to prevent cases like FTX happening, right? I mean, that we finally can try to prevent these kind of cases happening. That is bringing distrust to the ecosystem.
Also a little bit of a mistake, right? I mean, by not giving the right, I think regulation is a strong word, but not giving the right guidelines, right, towards exchanges, or I think something like an ETF. What happened, obviously, is that all the volume went offshore. So the end result of not giving these guidelines was that he's going to sit in the Bahamas, build his exchange, and have 10 billion in deposits. Yeah. So it's obviously they should have done it earlier, made it very clear how they want in this case, US customers to be protected. But yeah, I think it's very clear that there needs to be a good set of rules, right, which they need to abide by on a European level, Asia, and in the US. But for sure, we don't need to stiffen innovation, right? So how are you going to regulate something like Aave? You tell me, right? I think it's near impossible, and I think we shouldn't, because that's where the real innovation is happening. So we need to, find ways to make sure that we protect consumers at large in a good manner. But there's also some self-responsibility there if you use Aave, and that's obviously also the idea of this technology. But we shouldn't start regulating all this DeFi innovation.
Is it possible to regulate DeFi?
Well, you could start to, you use chain analysis tracking tools. You could say, okay, this deposit is not allowed to use that application anymore. And I think there's discussions in the industry itself that's probably needed, right, into a certain place. But I think Uniswap is probably the best example here, right, which they're very at the forefront of regulation, even to the discussion around, okay, how we're going to go, who's building our UI, right? Is it going to be ourselves or someone else? And can someone fork our backend and put a new UI on? So I think I think we need to make sure that there's enough innovation there, and definitely not stiffen it, but it's crystal clear at this stage, and especially after what happened this year, that we need to make sure that, especially where these big deposits are, if it's custody, custodians, exchanges, and these types of counterparties, they need to be almost near.
What kind of rules are you abiding as a fund? And that's a question coming from the audience. Like, what do you usually look at when you analyze risk and fraud risk in crypto projects, companies, and investments?
Our rules are that we just invest in cool stuff, but
cool stuff. That's like
obviously we are completely compliant to Dutch laws here, right? As a Dutch fund, so I think that's obvious, right? There's no way to go about it. That's completely fine. When it comes down to investing into certain protocols, we use some of these chain analysis software. So when we, for instance, would deposit in a DeFi protocol, we get a sort of a risk score at how much money has been here with all the addresses combined. That's quite a big task, so that's all automated. And then due to that risk score, we can say, okay, this risk score is too high, we're not going to be an investor or a user of this platform. And if the risk score is very low, obviously we can. So I think there's already very good software giving you tools to make sure you're going to stay away from wallets who have been on certain places, think Silk Road or anything else, and to make sure you're going to be compliant in a certain way. And this is sort of a soft compliance, if I may.
Another question from the audience is, like you mentioned, Uniswap, decentralized marketplace for cryptos. What is your take regarding their new data collection, such as identifying IP, screen size, and other metrics?
Yeah, sensitive, very sensitive. I think I understand what they're doing, right? They're in a current environment that they need to start implementing these type of measures to be compliant in where they come from. But obviously they're a US-based company, so that's probably required for them to continue to operate, or for the founders not to go to jail. That's sort of the assessment I'm making here. I think as a user, you can say, okay, I'm fine with using Uniswap because it does these things. That's maybe not. I don't really have an issue with it, but it's the best liquidity venue I can use. And if you don't like it, you can go to SushiSwap, or you can go to Balancer, or anywhere else. So there's so many alternatives, right? So I think we need to build systems which gives us different options. Just like money, I think the discussion with Bert was a great discussion around money and value. And we have given euro and dollars value, and it's money today. But I think Bitcoin and Ethereum and these new alternatives are also money in my world, right? And I think the user, me as a user, can opt in. Do I use euros, Ethereum, Bitcoin, anything else? And I think that's also what these types of applications do. So I think there's a lot of different solutions, and you as an end user can say, okay, sorry Uniswap, this is not what I want. I'm going to go somewhere else.
Yeah. And what about Icoinic? Do you also select cryptocurrencies, or is it basically like, well, the AI told us to invest in Dogecoin, so now we invest in Dogecoin?
I think if you're opening our engine and look a bit in, then you definitely see a lot of cool stuff underneath. And part of it is built around investment committee. I think it's probably quite similar, where we're continuously tracking, reviewing what to the ecosystem, what is interesting, where should we invest, and of course at weight of the portfolio. And for us, the question is primarily liquidity. The way that we do our trades, do tens of thousands of trades a day. So for us to enter a new project, we cannot go into, pardon my French, a shitcoin. So if the cap is very low, not very interesting for us, even if it might be very interesting to parties. But to enter into Aave, SushiSwap, or any other asset that we're able to deploy our algorithms effectively, and also do it with the right risk and compliance oversight on top of it, then we can do those kind of assets.
Yeah. Now, closing down this conversation, we just heard from Bert that we have to cry another year. So 2024, you know, we can maybe have some fun again in the crypto scene. What is causing the next wave of institutional adoption, you think, from your side? We've been discussing the retail adoption. From your side, what will cause the next wave of institutional adoption, this next kick of the bull market?
And then you mean institutional adoption on the investment side specifically? Because I think the adoption is being built by the ecosystem in use cases, right? So I think what we have learned is that we started building these open finance world, we started building something around NFTs, and then the institutional came on top, right? Because they saw, okay, this is interesting, this is innovative, we see use cases, there's money being made, we see new business models. So I think they came after we saw these things being built. I think institutions, I don't completely agree. I think institutions will shy away for a little. I think there's now a clear cry for regulation and better clarity before they're going to start to deploy again. We're actually raising for a new fund since 3 weeks, so that's a good timing. But actually, that's definitely the feedback we're hearing across the board. We'll call us back in February when things quiet down, the dust settled, and then we'll see where the industry is. So I think they're going to sit back, relax, they've deployed. And I think we as an industry need to, what I just said, right, build better infrastructure for the next wave of adoption. I think that's also why 2018-19 was so instrumental, because that's the time when we start to build very good custody solutions. I mean, before you had, probably most people are still walking around with a ledger or a different hardware device, and now we have very sophisticated custody across the board, Fidelity, MPC technology, which is technology which allows you to shard away the private key, and these types of solutions weren't there, and that allowed for that institutional adoption because they could, in a safe way, hold these assets. And now we need to start focusing on new verticals, and I think gaming is going to be an interesting onboarder for retail adoption at least. So we definitely expect a lot of innovation there. And what I just said, DeFi is just going to continue to grind on and build it better in such a way that it's better usable, and that we slowly can start to migrate away from decentralized institutions we still use a lot today.
And I think that everyone were talking previously about crystal balls, bold enough to try to rub it here and there.
Can I try?
But welcome. But I think that if you're looking at it, there's a few clear things. One, regulations. You need to have clarity for institutions to come in because that's the rules of the game. Know how to enter. Second, you need to pass due diligence. There's clear requirement. Who's your depository? Your fund administrator. How do you do your audits? Do it yourself. Let someone else do it. Do you have enough minimal capital for an institution to enter into your funds? So these are clear requirements that if you're talking to small to medium to large managers, ABCs, you need to already play at those levels. And the last part is timing. So we're, of course, very focused on our crypto ecosystem, and it's very important for us to stay attuned to our own business. But let's not detach ourselves from what's happening on the macroeconomic side in the world, talking about where crypto is at right now. I think crypto as an ecosystem timed itself very well to a global recession. And I'm talking to other managers that have exposure to bleed stocks and that in tanking in the trillions. Then indeed, a lot of institutional parties are saying, let's talk in February, let's talk in March. It's primarily because they're afraid about what's happening to in their own backyard. So this is the best times to launch new funds. This is the best time to bring products to the market because you're starting your history from the low state. You pass those DD requirements. You have the right capital support. And as we have better oversight from the regulator, the snowball effect of bringing institutional capital into the game is just getting into a whole new ball game.
At least some positive closing.
Yeah, but I agree. I think 2023 starts as an investment year. I think reminds me of 2019. So we did our best return as we all did in 2019. I think 2023 will indeed be that year, right? Building not so much capital, not so much competition in the space. So now is the time to build harder even and make the right bets in this year. So it's going to be a very interesting year in my opinion.
Build harder.
Mm-hmm.
Gentlemen, may I thank you for this conversation.
Thank you very much.